Michal, it seems like there's so much money flooding into Silicon Valley, in particular, from all sources, whether it's SoftBank or, private equity. Do you expect this spout, essentially, to continue?
There have been record fundraising activity. You talked about the private equity, the traditional private equity. Last year was a record year. This year is kind of on its way to be another $300 billion of capital being raised. But you're right, it's not just private equity. It's sovereign wealth funds. It's alternative. Also, I was going to say corporates have their own venture funds. So you're talking about the venture capital community, the PE community, sovereign wealth funds, corporates, and family offices. So you're asking about will this continue in terms of fundraising? I think there's a lot of dry powder being capital raised as well as assets in portfolio of private equity firms that is out there and available to be put to work. So people are looking for returns, and yeah, I don't see an end in sight.
So you don't see a time when the powder will dry up?
It's not a matter of the powder being dried out. I think there's a lot of capital sitting on the sidelines. But if you're a disciplined investor, the big question for me is, where do you put the money to work? Do the valuations justify making the investment at this time? And to me, that is the bigger question. One data point from PitchBook that came out, that there has been a drop in capital calls. So folks have been raising money, yet capital calls, meaning actually asking investments to fund their commitment, have been dropping, and distributions have been exceeding capital calls.
So what does that mean? That
means a lot of money on the sidelines, and folks are looking to put it to work.
So I want to talk a little bit about Tesla here, because it's super controversial. There's a sovereign wealth fund potentially involved here, private equity potentially involved here. Elon Musk wants to take his company private, and most people that we've talked to think it's not actually going to happen. In fact, there's a zero chance. How does that play into the current dynamics that we're seeing? Is there enough money to even fund a buyout of that size?
The answer is, over the last couple of years, we've seen LBOs that are of sizes that I would say record levels. We've seen Michael Dell's Dell LBO. We've seen the buyout of EMC. We've just seen the Thomson Reuters, the financial and risk division out of Thomson Reuters being acquired at $20 billion. Capital is there. If Elon owning 20% or so of the company, if you have employees or other investors that are willing to roll over, that kind of hole, if you will, that needs to be plugged in terms of funding, can be put out there. But I think that there are so many more questions beyond capital. I will tell you that capital is a question. It's not the question.
So what are the odds you'd give of such a deal happening?
Given can't comment on that, just being that I'm in tech banking and other involvements of the firm, I just think that there are a lot of obstacles out there. It'll be some, I wouldn't put it, as a former lawyer, I would never say never, but I think the odds today, I would put them as rather low.
What are the pros and cons of giving another entity like the Saudi Sovereign Wealth Fund, as an example, that kind of control? I mean, we've seen this fund take a 5% stake in the company.
Right.
We've also seen, news leak about some of their other investments, and because of their large stake in Tesla, they're now completely vulnerable to any news that comes out about the Saudi Sovereign Wealth Fund's other prospects.
And again, I don't have inside information as to what their current state is. There have also been news out there that they're looking for funding of their actual public investment fund. Like, they've put money in Uber as well. That was one of the leaks that you've alluded to. You say, what are the benefits? I really think that you're looking at an economy that's looking to move from a petrostate into a more technology-focused economy. It's a big country, and it's an opportunity, perhaps, to try to leverage some of their core competencies. So I'm not thinking about it more from the CFIUS or other type of regulatory, but I do think that there are benefits to going outside your traditional pools of capital, whether it be through corporates or Saudis' access to their region of the world. There could be benefits having them be part of an investment.
What about on the public market side? We've seen stocks in general on a historical run. Will that continue?
Oh, that's like the $1 million question.
Or $1 trillion question.
Absolutely. Look, from It really does depend. I mean, in terms of the overall valuations, one may argue that we are at a point where valuations are kind of we're fully valued. But it's been incredibly, I would say, receptive market for new IPOs. IPOs have been one of the best performing asset class. We're seeing a slew of M&A activity. Large deals are back in vogue. As you recall, last year really saw like a dearth of like large transactions. And that was one of my big concerns is as valuations continue to run up, at some point, again, you're being a disciplined investor, a disciplined acquirer, will you continue to want to play in this market? As long as the fund, you asked the question, will it continue? From where we're sitting today, the economy is on a sound footing. Corporate earnings have been doing well. The VIX is still at 12 times. It seems like this bull run has some more leg to it.